today on the Tearsheet Podcast.
I think we view ourselves as a payment alternative, but also as a retail partner and a consumer partner. And what we're really trying to do is enable consumers to spend responsibly. So I think that goes beyond being a payment option. And certainly, we build very close partnerships with our retailer partners, supporting them in terms of, customer acquisition, growing their business, and increasingly in the future, supporting their in-store businesses as well.
Welcome to the Tearsheet Podcast. I'm Zack Miller. Afterpay is one of the fastest growing buy now, pay later firms in the world. Based out of Australia, the fintech has recently expanded into the US and is planning to expand to Canada soon as well. Afterpay US CFO Laura Nadler joins us on the podcast to discuss Afterpay's model and how positioning itself as a partner to retailers has helped it chart a path for growth. Nadler has spent most of her career at traditional financial firms like Visa, and we talk about the tailwinds in the business and how COVID is impacting customers and merchants alike. We also discuss Afterpay's launch of a new loyalty program. Laura Nadler is my guest today on the Tearsheet Podcast. What could you do with better real-time consumer data? All data aggregation from Fiserv enables access to consumer permission data from over 18,000 sources. Lenders, advisors, fintech firms, and financial institutions can turn this data into actionable insight for their customers. Go to fiserv.com/alldata to learn more.
I am Laura Nadler. I am the North America CFO for Afterpay, which I joined at the beginning of January. Prior to that, I spent 6 years at Visa and have spent most of my career in finance and strategy roles at large financial services companies and payments.
So fair enough to say this is your first fintech experience?
Yes, and I knew I was going to be in for a big change, but I don't think I anticipated the magnitude of everything that would happen over the past 6 months.
Yeah. Well, do you think, obviously it's magnified because of what's happened over the past 6 months, but can you talk a little bit about that transition moving from like a traditional company like Visa to a fast growing fintech?
Sure. One of the things I thought about a lot, I kicked the tires and tried to get a reality check of what it would be like to go from big companies to younger and faster growing companies. For me, I realized that the times I loved at big companies were the times when they were undergoing a lot of change and when they weren't acting like big companies. So I decided to take the leap and go someplace where that would be my full-time experience.
And what about the transition, I guess, did you find most challenging?
I think the pace, I certainly knew going in that it was going to be intense, and I worked at a pretty fast pace at Visa and my other companies. But there are things that we do at Afterpay, in 2 or 3 days that would have taken weeks or months at a larger company.
So let's switch to Afterpay. For listeners who may not be familiar with it, can you tell a little bit about the lender?
Sure. So Afterpay enables consumers to buy now, take now, and pay later with 4 interest-free installments. It's actually not a traditional loan. We do no credit check, there's no interest, and there's no way to revolve. Afterpay globally is offered at over 55,000 retailers and brands, and in the US, we've grown to be over 15,000. To give you a little bit of a flavor, we've got Kylie Cosmetics, Finish Line, Urban Outfitters, ASOS, Ulta Beauty. And in addition to the benefit to consumers of being able to plan and budget and manage their spend, obviously we think there's great benefit to retailers who get to grow new customers as well as accelerate their sales. Our shop directory in the US referred 10 million leads to retailers in the month of May. And as our network grows, of course, that number will grow as well.
That's awesome. And I guess it helps retailers because they can sell more product and they don't have to put up the financing themselves, right?
That's right.
Okay. So can you talk a little bit about the model? You mentioned there's no interest attached to the 4 payments. Can you just talk about, I guess, how a consumer would transact with Afterpay?
Sure. So from a consumer standpoint, you go to your retailer, you can go through the shop directory, you can go through the retailer's site. And when you're checking out, you're presented with a choice and can choose Afterpay. When you do that, you'll see what your 4 equal payments will be, and the app will keep track for you of your payment schedule. We also send you a reminder when a payment is going to be due, so that you can make sure you plan for that. And for consumers, as long as they're paying on time, there are no fees and no surprises.
And now, a word from our sponsor. At Tearsheet's Day-to-Day conference, Fiserv's Paul Diegelman drilled down into the future of personal financial management. Paul, you're talking about PFM 2.0.
It's actually 2 separate and distinct applications. Liquidity is a huge problem right now. People just don't have time to do things twice. Basically, most parts of the country shut down for COVID. Our PFM user growth was over 20% in the first 2 weeks alone. Underrated, 100%. How could we use AI to impact PFM? I'm up for anything that helps people. And to help people, you need an economic model.
To access the full video from Paul's talk, go to tearsheet.co/speedoflife. And how do you get away without doing a credit check?
Well, we've built our own algorithms and models, and we actually look transaction by transaction.
Interesting. And obviously, BNPL, as we call it in the industry, buy now, pay later, is growing. Afterpay's roots are in Australia. Can you talk, I guess, maybe about some of the macroeconomic sort of tailwinds to the sector?
Sure. And certainly some of those tailwinds and trends have accelerated over the past number of months during the global pandemic. I would say one significant tailwind is the fact that many millennials and Gen Z consumers don't want to use credit. They really prefer to be able to use their own money, plan and budget. So we've seen research that says about only 29% of millennials use credit for everyday purchases. That rate's even lower for Generation Z. 90% of Afterpay payments are made by consumers using debit card to make their installment payments. So that is certainly a trend which was at the heart of why Afterpay was founded, and it's accelerated during the COVID period. Customers are really avoiding expensive credit options. Looking at the earnings release for my former employer Visa last week, they've seen U.S. credit volume decline over 20%. At the same time, that debit grew 8% in the most recent quarter. So that's one key trend. Another that has been very evident over the past 4 to 6 months is the shift of spending online. And I think over about 10 years, online spending as a percentage of retail sales grew about 10 percentage points. In about 8 weeks this spring, it grew another 10 percentage points. So, obviously, a lot of our business is transacted online. We are launching in-store in the US, and that's an established product in Australia. But those are 2 big trends that we've seen over time, and also we've seen accelerate recently.
That makes a lot of sense. Can you talk about, you described sort of the flows with the online checkout. What does it look like in store for a consumer?
In store, we are partnering with Apple Pay and Google Pay. So for a consumer, it basically looks and feels like a contactless transaction using one of those wallets. Again, with information from our app to help consumers understand, what their 4 equal payments will be, and to track that payment schedule.
So it sounds like because it's in the checkout flow, consumers look at this as a payment option, not as a loan. And I guess structurally it is as well. But do you guys look at it that way? Do you view yourselves as just a payment alternative?
I think we view ourselves as a payment alternative, but also as a retail partner and a consumer partner. And what we're really trying to do is enable consumers to spend responsibly. So I think that goes beyond being a payment option. And certainly, we build very close partnerships with our retailer partners, supporting them in terms of, customer acquisition, growing their business, and increasingly in the future, supporting their in-store businesses as well.
Is that the Afterpay secret sauce? I mean, we've been covering the sector, for a few years, the firms of this world. But Afterpay's growth, again, this is qualitative, not quantitative, but it just seemed like it's so outpaced everybody else. What do you attribute that to?
Yeah, I think the growth is because both consumers and retailers value what we do, and we've really built the business to be a win-win-win business. In terms of growth in the U.S., certainly progressive retailers see the benefit of building a business and focusing on millennials and Gen Z who prefer to budget and to pay over time. So I think a lot of the growth has been driven by the value we deliver on both sides of the network. And also being able to leverage a lot of the learnings from the Australia business.
And I guess, is there sort of a portfolio strategy that you guys employ when you think of bringing in new retailers? Like you talk about progressive retailers in a way, by partnering with them, you ride their growth as well. I mean, is that part of the strategy?
Yeah, and I would say that we see it as a virtuous cycle with our retailer partners, but certainly the stronger our network becomes, the more referrals and growth our retailers will see. In the U.S., we have primarily focused in fashion, beauty, and lifestyle so far, but certainly new verticals will be an opportunity over time. And the Australia business has expanded into new verticals and really shown that the model works and is transferable across sectors.
So I guess as a follow-on question, do you do much consumer marketing, or you focus more on merchant acquisition?
We really focus on both, and
Mm-hmm.
The consumer brand is important, and that benefits consumers in terms of knowing what we're about and that they can trust us. That this really is a business that's built and founded in trust and financial responsibility. The brand is also beneficial to retailers, and having a strong consumer brand obviously attracts consumers, and that's incredibly valuable to our retailer partners as well.
That makes sense. And how do you, as the sector becomes, I guess as consumers become aware and merchants as well, how do you guys differentiate Afterpay versus some of the other options out there?
Yeah, I would say our value proposition is purposefully different in that we don't offer traditional loans and no credit check, no interest. Afterpay is offered on discrete purchases and not a line of credit. We also take it a step further, and if a consumer is late on payment, they actually can't use Afterpay to buy more until the repayment is made. So this helps consumers avoid debt and frankly helps us manage risk as well. So again, a win-win. So we really stand for financial wellness and good payment behavior. A great example of that is the loyalty program that we recently launched, and I do view this as a differentiator. Our loyalty program actually rewards consumers for on-time payments, which I think is pretty different from most loyalty programs, which are encouraging spend, and you get more points for more spending. Our program, if you qualify, and you qualify by making on-time payments over time, consumers who are in the program are able to make some different choices, including no payment upfront on eligible orders, being able to reschedule payment due dates up to 6 times every year, buying gift cards from some new brands that weren't previously on the Afterpay network, and also receiving future exclusive offers and limited launches in partnership with retailers.
That's an interesting point. I guess I have another question. It goes back maybe to your Visa roots. So actually, I live in Israel, and a lot of our debit cards are actually built in with multiple payments at the card level. So at most everywhere you swipe, pretty much you can do that at the point of sale. Uh, how do you guys think about? And I know Visa and Mastercard both have launched partnerships in the buy now pay later space. Like, do you view them as a potential competitor? You view them as a channel partner? How do you guys think about the card companies?
We view them as a partner for sure, and an important partner. They are working with us both on accepting consumer payments. And our consumers do use primarily debit and also credit, but that rides on card rails. In addition, our in-store product leverages the card rails. So they're definitely an important partner to us.
Interesting. And do they act as a partner in terms of merchant acquisition as well?
I haven't seen that as much, although I did work with the head of merchant sales and acquiring when I was at Visa, and have introduced her to our global head of sales here at Afterpay.
Awesome. So can we look at, I guess, into the future? I guess so. You've been in place since January during the crazy, most tumultuous time of probably all of our lives. What are you thinking about the future? Like, what are your biggest priorities, like into the second half of 2020 and looking ahead?
Sure. I think, it's all about driving growth and really continuing to build out the network. And there are three ways that I see for us to drive growth and that we would prioritize. The first is continuing to innovate and bring value to consumers and retailers. And obviously the loyalty program and in-store are great examples of that. In addition, we have the opportunity to grow in new markets, and very excited. Canada is up next, so we'll be launching in Canada before the end of the year. And finally, in the U.S., we continue to have lots of room for growth, both within fashion, beauty, and lifestyle, and also the new verticals we talked about. So we plan to continue to invest in both consumer and merchant acquisition to accelerate our growth here.
That's amazing. And my last question, I want to circle back to, I guess, where we started. 6 months ago, when you transitioned from traditional FI to a fintech, is there something you wish you would have known as you got in? You mentioned maybe the pace is different, but like, look, hindsight is 2020. But like something that you think you could have done better or would have been more prepared for, knowing that.
I think even knowing that it was going to be intense and fast paced going in, you can't quite prepare yourself for the reality of that. Obviously, I put a lot of focus on building a great team and bringing in people who can help me drive that growth and keep that pace moving. I would also say that at big companies, you generally have experts you can go to. If a question comes up around a particular topic that's not your expertise, you can go and ask the person whose expertise it is. At a smaller place, the onus is really on you to figure it out, and I've really enjoyed that. I think I've learned a tremendous amount in the past 6 or 8 months, and it's fun, but it's also hard. So figuring out how to navigate, how to get up to speed on things, just really having to be able to figure things out yourself. It's a big difference.
Yeah, it sounds like there's a lot more, intellectual autonomy maybe. Laura Nadler, Afterpay US CFO, thank you for joining us on the Tearsheet Podcast today.
Thank you.